the day to entice you with what is going on in the markets. We have a lot of crazy things that are going on around here, and we need to actually pay attention to some of them. And today we are going to break down each and everything that is important to each and every one of us as traders. Remember, we do not trade the noise. We actually focus on what is going on. And right now, if you're not trading with fundamentals or at least sentiments, then you're trading blindly. So let me open up your eyes and ensure you're not trading blindly, because things might actually hit the fan, or things I don't want to mention. But let us start this stream here. Very nice and easy. So what I want to do, let me first see what's going on. So how are you guys doing? What's going on? Make sure you are active so that we can know that we are on the same page on everything. So just make sure you're active in the chat. Make sure you're liking the stream and whatnot. Let us just keep this boat rocking, my people. You know what I mean? So let me just open my chats here. And we're going to analyze the market, both aspects. So I'm going to look at it fundamentally, I'm going to look at it technically, and we're going to see exactly where we are right now in the global landscape. In fact, as a matter of fact, let us see if we have any news. Remember, we are just 10 minutes shy of New York Open. So we are going to do some things very fast so that by New York Open, at least, we know what's going on. So let me see. Today we have, ooh, this huge, but not going to affect things right now. So I think I'm going to start here, because when the opportunity presents itself, you do nothing but take it. So let me just set that up so that I'm ready. Are you ready? I know I am. Anyway, guys, as you can see right now in your chat, right, or in your screen, this that I have shared, you can see we have some few news releases that we had today, mostly for the NZD. So this, we have filtered our Forex Factory to actually just give us high impact news. And you can do that simply by coming here. If you do not know, just coming here and checking out every other box except for the holidays and for the high impact news. And so that is exactly what we have done. So as I was saying, look at this. Today we had mostly news from the NZD. So we had the official cash rate. Remember, monetary policy, very important for any currency. So the official cash rate. We also had the RNBZ rate statement. So we got the central bank president or chair, call them what you want, but the official statement was released here. And maybe when we get time, if we have nothing else to do, because right now I just want to rush through some things so that by New York Open we have an idea of where the market is headed. So the main thing here is that we are still in a rot holding cycle for the RMBZ, which is the Reserve Bank of New Zealand. And we have been holding for quite some time right now. And I think we're going to be holding for the distant future or for the near future. Look at this also. We had, or we to have the FOMC meeting minutes. Remember, this is not the actual meeting. So what happens is that FOMC was actually, I think, a week ago, if I'm not wrong. Right, guys? So FOMC was last week or the week before that. So usually it is at least 1 week after FOMC, we get the FOMC minutes. So let me just do one thing here real quick, guys. Absolute perfection. So now we can continue. So as I was saying, right, the FOMC have their meeting, let's say last week. And then what happens is that during the meeting, if you remember, right, on in English class, we had this thing called minutes of a meeting. So the minutes of this meeting are released to us, the traders and investors, a week after that. So we don't get the actual data on the day. Why is this important, guys? You might be asking, why is this important? Why do I care about the minutes of this meeting? I don't really care about it. I just want to know the monetary policy and things like that. But you need to care as a trader, as an investor. You need to care. And this is why you need to care, because you get to understand why they made their decisions they made. Remember, the whole market is driven by sentiment of what is going to happen in the future. So not what is happening right now, what is going to happen in the future. When we say Trump is threatening to escalate war with Iran. Let me use this as an example. When Trump is threatening to escalate war with Iran, what this does is that it brings right into the market that in the future we're going to have less supply of oil, or the supply of oil is going to be limited in the future, and so the market reacts in the future. So for this future news, we say what we want to buy in bulk and protect ourselves from any oil shortage. So this is why oil prices jump to the upside. So we don't have the shortage yet, but we're anticipating a shortage to come in the future. So we are making those bets right now. Their commercials, they're going to make their bets in futures contracts, and non-commercials, people like you and I, we are going to just buy our own side as well. But remember, the commercials are actually looking at the actual oil. But people like us, we're going to feel it in the economy as much as we are not really caring itself as a commodity. But what it does for you and I simply is that it ensures you have food in the table. If you are in Europe, it ensures you have what we call heat in terms of winter, and it ensures you have a lot of other things. Remember, oil is used in manufacturing as well. So prices of goods and services can go up when oil is going up. Not can, but will and must. When oil prices are shooting to the upside, this is going to translate into the consumer very fast. Remember, it's a very volatile commodity. And that's why perhaps every central bank likes to use the core. So we use the core because we remove oil prices and what we can call food prices, because these two things are very volatile and up and down from time to time, or time and again. They're up and they're down in the blink of an eye. So let me proceed here. So this is exactly why we are going to wait for the FOMC minutes, and we're going to see the market react accordingly. So things have changed ever since we had that meeting. Remember, right now we have this 2 week ceasefire. So that is something that you need to keep your mind on. Look at this. 3 hours ago, several explosions at Iran's 11th refinery, semi-official, blah, blah, blah. So we can see, right? We can go over some highlights, some news here. Guys, let me first open my X and clean up a little bit. You know how X can be crazy. So what I'm going to do here, let me come here to notifications, and we're going to see some of these news that we follow. So just a second, guys. Boom. Look at this. Sanchez to Trump. Spain won't applaud those who set the world on fire just because they then show up with a bucket. So maybe it's talking about the fact that it's going to go after their oil. Now, let us see something else interesting. Home buyer mortgage demand drops annually for the first time in over a year as war fuels uncertainty. The demand for are going down. Remember, our economy is run by debt. So if mortgages are, or the amount of people going for mortgages is going down, you know exactly what is happening. This is a crazy place to be in, right? So let me see if we have something. I need something crazy about the war. So we currently don't have anything crazy about the war. So did I put latest as well? I don't think I did. Do we even have that filter? Because what I want to see is if this guy is tweeting any new things. You see this 3 hours ago, oil tumbles shocks, stock surge as market greet US-Iran ceasefire with optimism. So the market is a little bit optimistic about the ceasefire. Lubnani economy minister seeks clarity on ceasefire. Mixed signals as Israel strikes continue. So Israel are still continuing with the strikes despite there being a ceasefire. Oil tumbles below $100 as US Iran ceasefire agrees. Remember, with that even in the morning at Omni Markets Academy. Let us look at something else. Boom, this is what I was looking for. A big day for world peace. Iran wants it to happen. They've had enough. Likewise, so has everyone else. The United States of America will be helping with the traffic buildup in the Strait of Hormuz. There will be lots of positive action. Big money will be made. Iran can start the reconstruction process, we'll be loading up with supplies or we'll be loading up with supplies of all kinds and just hanging around in order to make sure that everything goes well. I feel confident that it will. Fucking hell. Have I forgotten how to read, mate? I feel confident that it will. Just like we are experiencing in the US, this could be golden age of the Middle East. President Donald J. Trump. Amazing things here. So this was the tweet that he said here, or this was the tweet that he put out. I don't know if this is on Truth Social or his own account. I think I follow his own account and I've not seen. So perhaps this is on Truth Social. Like with this thing yesterday that one can believe that fake news CNN put out an annoyingly false, dangerous statement pretending it came from the upper levels of the Iranian government. It didn't. It was totally made up and posted as a headline for purpose or perhaps inflaming a very delicate situation. It was a very troublemaking site from Nigeria, and CNN just caught cheating, a very dangerous thing to do. I'm trying to find the Trump tweet, the exact tweet that he actually put out. I think it was not even a tweet. So what time was this? Remember nowadays, if you're trading and you do not look at what this guy is actually saying, then you can be nuked in but a second. Remember, right now, we are 3 minutes into the New York session and still we don't have a lot of volatility, but the markets at least are showing some movement here on some of the few pairs that I'm looking at. So we're going to go over that in but a second. I think we are now ready to begin here. So let me just look at the calendar so that we see what we have for the week, break that down, and then move towards something else. So let us do that real quick here. So today is on a Wednesday. As we said, we're waiting for the FOMC meeting minutes. After we get that, we're going to turn our eyes towards tomorrow because remember, we are getting the Fed's favorite inflation index or Fed's favorite inflation reading, which is the PCE. Now, the PCE is different from the CPI a little bit because the PCE actually accounts for things such as trends. And remember, when you're looking at trends, you know exactly why inflation is high or low. So when inflation is going up because of a particular trend or something like that, or supply and demand simply, you know exactly what you're dealing with. If it is something more structural, then you know exactly how you can pivot. That is why the Fed is very, very importantly looking at this, or very, very keenly rather, looking at this, making sure they are putting all their attention towards the PCE in terms of inflation. And this is the Fed's favorite index to look at. So we're expecting things to stagnate at around 0.4%. So we're going to keep our eye on that and see if we are going to stagnate at 0.4%. We are also going to get the final GDP for the quarter, and we're expecting growth of 0.7%. Remember, positive numbers for GDP show growth, and any negative numbers show a little bit of stagnation or perhaps even recession. Remember, if we have two, so when we're looking at economics, right, this is economics on one. In economics, if we have more than two consecutive negative GDP numbers, then this is literally a recession, right? When we have two quote unquote a recession. But in this case, right, going into a recession will take more than just the GDP numbers being negative. So this is one of the indicators really. It's not really that once we do that, then we are in a recession. This is just an idea that maybe if we are not there yet, we are going towards it. But we saw last year, I think, we had back-to-back negative GDP numbers for the pound, I think, but we did not go into a recession, or we were not in one at the time. Yes, the economy was shaky. Yes, things were a little bit tricky, but we were not really in a recession. So that is something I wanted to throw out there. Looking at Friday, we have the card news coming for the employment change. Remember, this is the same as employment claims. We have the unemployment rate here for the card as well. So look at that. We're expecting a rise in unemployment, and we're expecting positive employment change. We are also looking at the core CPI. Remember, CPI is just inflation. So core CPI expected for the month to come at around 0.3%, maybe just a little bit of a bump due to this oil embargo. And now look at that, month over month, we're expecting inflation to jump more than 0.7%. That will be huge for the inflation story. Look at this for the year. We're expecting inflation to jump from 2.4% all the way up to around 3.4%. If we get these numbers, this will be crazy for the market. So this is something you need to watch out for. If we get these numbers, the Fed might actually, right, might actually be forced to keep those rates or perhaps even hike them in times like this. So this is something you need to keep your mind on or your eye on. You can decide whatever pleases you, mate. Anyway, let me look at something here real quick before we proceed. So actually, before we proceed, let us just look at what we have here for the market and what the numbers are. We're going to jump into the COT data not long from now. Remember, we love looking at the COT data. I can hear my juices flowing when I talk about data. So let us jump straight here. Look at this. Look at this. Pay attention here very fast. We are up 5.9%. Looking at gold, up 2.5%. Oil down 13%. Remember, we had those jumps all the way up to around $106 a barrel for the WTI, which is the West Texas oil. But now we are dropping heavy down to around 86.93. Is this the lowest in the past how many months? So look at this. This was March. So lowest for around 2 months now. So this is perhaps the lowest price we have seen for a very long time right now. Look at that. We are threatening to go all the way back. Can we go back all the way down here in that 2-week period? Because remember, if things go well and this peace deal holds, this ceasefire holds for longer, then oil prices will be expected to shoot all the way to the downside. And we have a very interesting gap right here at around $68 a barrel, which the market might love to see retested or reclaimed. So just wait and see for that one. You can keep your eye on that. Looking at this, the market is looking very, very, very greedy right now. Look at NASDAQ. Tasty. This is tasty for NASDAQ. Look at this range. Remember, anytime we're back into this range, you're just looking for those moves to the upside. But right now, we are not getting any positions here because the market is just moving or pumping to the upside without letting anyone enter. We expect a little bit or some sustained dollar bearishness. Why? Because the dollar has mainly been strengthening because of those safe haven flows. Remember, the dollar is one of the safe haven currencies. So the dollar is partially or mainly moving down because the safe haven flows are starting to move out and going into other assets like the stock market, as you can see, up 3.4%. That is huge for the market. Look at the S&P here or the SPY. Remember, we had those lows here. Oh, this was huge. Look at that. We were dropping heavy, but right now we have gone all the way back above this range. So around the 6,500 level above that. And now we are going all the way perhaps to the upside, but we are still not above. We are still not above on the SPY. So that is something you need to keep your mind on. Looking at the Dow is one of the biggest gainers here today, up 2.55% and looking to continue here in the New York session. And perhaps we might see gains all the way up to like 4% if things continue going as smoothly as we have seen in the past sessions here. Looking at the DAX, amazing stuff here. But we have this huge gap here that might want to be filled. So that is something you perhaps might be careful of if you are looking to enter the DAX right now. Looking at the euro pound, look at this. The euro was gaining against the pound because of all that uncertainty, but now things have stopped. There's no more escalation, and look what we have here. So right now, all these bets are being made based on monetary policy and not really what currency people are going to jump to when we have a geopolitical tension scenario. Looking at the dollar Canadian, another one. Ooh, if I said that we might be interested in the dollar if we come back all the way up here and test this zone. And right now we are exactly there. So I think it will be disingenuous of me to not look to take some of these moves here and perhaps just hedge. Remember, I have a few positions on different pairs, but most of those directly linked. So if you can hedge here on the dollar card, this will be amazing. So let me see if I can reduce my risk here. Maybe just that. Let me see the daily time frame. Remember, we have this downward sloping movement here. Look at that. Nice. And you know what I'm going to do here? Let us do the volume price analysis here real quick. So I'm looking at this candle, a bullish candle, retesting that trend line, right? And then the candle after it looks like an engulfing candle, and it also engulfed with the volume. So that is perfect entry. And now we have the fundamentals checking in because we have that ceasefire deal, which means more weakness for the dollar. But this weakness is not going to last long. Look at this. We're still above the 50-period moving average. So these trades would be risky if we take them because we're going to have a lot of rejections like this, like this, like this, like this. And then before you know one, because of the 50-period moving average, and before you know it, the 2 weeks are over and you're not tapped your TP perhaps. So I'm going to keep an eye on these. But if I take it, I may take way lower risk. So instead of doing that, let me just hold and see if we can get better deals somewhere else. Looking at the dollar Swiss, we're finally retesting that 50-period moving average. Amazing scenes here. Look at that, the dollar Swiss. So if you can be interested in this, just like the dollar Canadian, you might have to wait for the break and retest here. Then you might be entering shorts at your own discretion. Remember, everything I say here is simply for educational purposes and none of it is financial advice. Trading can be very risky, mate. So don't you dare put that on me. Let me see, guys. Let me see, guys. Do you have any questions? Ooh la la. I guess I'll proceed. Look at this, the dollar yen looking so juicy. But remember, we have this very, very strong zone here that we rejected and retested and respected, R, as we call it. So we rejected, we retested, and we respected time and time again. So we are coming back there, and now we have something even crazier because we have this sloping trend line to the upside. Boom, booyah, Sean, look at that. So we're going to wait for that one as well. Let us look at something else here. The dollar, euro, dollar. Boom. Are we going to get our entries? I doubt it. We're already more than halfway up to where we want our TP to be. So I think this is going to drive all the way to the upside. But we don't care if we get gold to drive as well. Looking at cable, interesting story about how it was called cable. I'm going to tell you that in another video. Look at this, the pound, dollar, or cable. Amazing scenes here. Let us look at something else here, guys. Pound yen looking nasty as fuck. Trading this, all this indecision right here. All this indecision right here in mind, bro. The New Zealand. So Kiwi dollar looking dirty as ever. Look at yen, bro. This is interesting here. Oof, AUD finally retesting that zone. Can we break back above? We're going to have to wait and see for that one. Looking at Bitcoin, I was interested in this move today. Looking at that, I was interested in this move today, but I don't mind missing it. As I said over and over again, as long as gold the move, we don't give a fuck. So we just wait and see. You know what, guys? Let us look at the COT data. I think it is high time we look at the COT data. So I'm just going to head over to the Legacy Commitment of Traders report, and we're going to break down some of these currencies, some of these metals, some of these pairs one by one. Look at that. So let us start with the currencies here. Bada bing bam boom. What do you mean? The fuck is wrong with this? Since when can I not see? Don't even want the detailed report, bro. So now I cannot even look at individual ones. What the hell is going on with barchart.com? I think we're going to go back to our CFTC website, bro. To continue doing this, we're going to go back to the CFTC website. So I think you guys will look at this here as we proceed. So starting with crude oil, look at this. So this is the week from March 31st, 24th, 17th, 10, 3, and February 24th. So let us see the trend in oil. Look at this, heavy selling, heavy selling, heavy selling, heavy selling, heavy selling, heavy selling. Bruh, bruh, bro, to none, I mean. Let's just go to CFTC website, bro. I can't with this thing. So if you do not know what CFTC stands for, it is simply Commodity Futures Trading Commission. So I'm in the website and I'm going to look commitment of traders. So I got it. And we're going to go here into legacy reports. We're going to go to short format. Now, what do you guys want to look for? Let us see if you have XAUUSD. So we'll do Command F for search. Then we're going to do XAU. Or let us do gold, guys. Let us do gold. So nothing for gold. Let us do XAU. Nothing for XAU. Let us do GBP. Nothing for GBP. That's crazy. Nothing for as well. That's even crazier. Now what? I'm looking at the wrong thing again, guys. So now we're going to do Command F again, and we're going to search for XAU. So nothing there. We're going to search for gold. Nothing there as well. Nah. We're going to search for GBP. Here we got it. GBP, we got it. Pound, Chicago Mercantile Exchange. 331.26. Beautiful, beautiful contracts. Guys, we don't have a lot of motion here today. We don't a lot of to the downside on gold. Will we move to the downside on euro dollar as well? We're going to wait for that and see. But guys, I'm just going to take some questions and then leave. Not feeling so well here today. So unless you guys have questions, I'm going to skid out a lot of here. Look at that. Gold down around 1.44%, which is a crazy thing to think of. Boom, 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 booyakishan. If everything goes to plan, gold should go around 1597. And if it does that, or once it does that, I think it will be an amazing dynamic. Leave right here. So I think you guys have a beautiful one, man. And until next time, guys, let us meet when you can't avoid. Cheers.